Commodity Markets Outlook 2017. Torsten, a new year, Happy New Year, of course. We just start January 2017 and we want to talk about commodities and an outlook of 2017. So what's your outlook? I think you said a new cycle started last year. Why?
Yeah, in December we published our commodity market outlook for 2017, and happy that December we started with it about having a positive outlook, about 20% positive for commodities for this year, following a very positive year with 15% in 16.
Okay, and why do you say a new cycle starts now? What's the reason for that?
First reason is we are behind a 5-year severe bear market for commodities, what we've witnessed before. 5 years, investor felt the pain in everything, base metals, energy, but also in agricultures. And 16 was the first year we've seen not only a technical turnaround, like low prices in February, a technical positive pictures breaking above the 100-day moving average in April on a commodity index base, but also fundamentally some of the commodity markets changed to a better picture. So therefore we think 16 was like the year the cycle started again on commodities.
Interesting. If we come now, for example, to the Bloomberg Commodity Index, it's called. Yeah, you are predicting like a surplus of 20%. How do you come on that for 2017-18? I think it's a nice chart here anyway.
Thank you very much for that. So basically when you look at commodity markets and see like an index like the S&P GSCI, the Goldman Sachs Commodity Index, or the RICI, the Rogers Commodity International Index, the BCom, Bloomberg Commodity Index, is like an MSCI World for the equity investors. So therefore it's your measurement for how is the market behaving, because it has like energy, base metals, precious metal, and agriculture. So it gives you a broad show up about the price trend in commodities. And after we've seen like a 15% up and last year, we see like a 20% up. It's like a normalization of commodity market returns. And this also implies that the economy is not growing like potential growth. It's sub-potential growth, so it's a slower growth than expected. Otherwise, our forecast would be slightly higher to 25-30%.
Okay, so is maybe Trump also one of the reasons with his infrastructure program? Just a short yes or no, maybe?
Actually, Trump is like coming on top, so therefore no. Yeah. We finished our capital market outlook for 2017 on commodities before our election result.
Okay.
So this was definitely not our base case. It hasn't been around the globe as well. So there's a positive surprise with Trump trade coming out of commodities, especially like energy, base metal, but also equities. Lots of fundamental positive things to emerge during the 6-12 months and later. But this is giving you some additional surplus to an already positive changing picture.
Great. So why are then the commodities, are they still cheap as we had a first run last year, or are they expensive? What's your opinion on that?
Depends in terms of some of the commodities. Overall, when you compare commodity price and return levels to their 3 or 5 year averages, we did here 5-year averages, you see the majority of single commodities is still very cheap compared to these average prices. So therefore we had the first increases, nice increases. What you saw like last year is a 50% increase in zinc, for example. So this is amazing. Adding on the Trump trade last 20%, actually base metals became like an index leading component, just like in the last quarter. Whereas, for example, precious metal has been a very good sector the first 9 months, but then dropping back, still falling back, but still solid positive. But this picture shows you that lots of commodities are still comparable cheap. So therefore, we see some more potential for appreciation in prices.
Great. So then, of course, the key question for the outlook for 2017, what would you overweight? What are your, let's say, key projections for special commodities? So let's say you wrote it, top long ideas 2017. What are they?
So our top long ideas based on our relative valuation models, relative valuation compared to Bloomberg Commodity Index return. As mentioned, we see Bloomberg Commodity Index can result in a 20% plus for 2017 if everything goes like planned. And what you see here is like a relative valuation if a single commodity is outperforming the index or underperforming an index. For example, we value gold as neutral, means that gold neutral to an index is appreciating in our view 20%. So this for investors is a superb investment. But our top ideas on the long side are crude oil, nat gas, and zinc. Zinc still after a very good performance.
Fantastic. Okay, we will see what happens with that. Torsten, then thank you very much for taking the time and for the outlook.
A pleasure. Thank you.
Thank you. Ladies and gentlemen, that was Dr. Torsten Dennin, the Chief Strategist of Tiberius out of Zug. And you heard it. The top picks are crude oil, nat gas and zinc. And maybe we have to consider some copper and uranium. We don't know, but we will see. And he's very positive on the commodities for this year. A new cycle has started last year. Yeah, we will see that. I'm your host, Jochen Steiger from Commodity TV in partnership with Dukascopy TV. Thanks for watching us. Bye-bye from Geneva.